why everyone got 2025 wrong, and how to win in 2026.
Why buy Bitcoin when gold is destroying it? If gold isn't beating USDT, don't be in the trade. If gold isn't beating Bitcoin, then be in USDT.
The FOMO is a very powerful feeling. It takes a lot to overcome it, I feel.
Key thing, psychology drives everything. I run a multi-million-dollar fund and an incredibly big personal portfolio, and I will not look at the charts for days. I didn't do one trade for a month over Christmas. I didn't trade once. I didn't need to. You don't make money selling the tops because that's never a reality. You make money in the middle ground. Crypto is the highest risk asset that we invest in. You play the middle ground, you can still outperform every other asset class 10 times over.
So today we're doing something that's become almost a bit of a customary tradition here at Tapping Into Crypto. We're doing a bit of a retrospective on last year and a look forward into the year that we've come into now with Joe Shew, CEO and founder of CCI, the Crypto Consulting Institute. Joe, welcome back to the show.
Mate, thanks for having me as always. Really excited for the session.
So those who don't know Joe, definitely recommend checking out his content. We'll have links in the description after the show if you check out the notes. But essentially one of the longest standing education platforms in Australia, and has the results to sort of speak for itself. So if you haven't checked out Joe and his team, definitely recommend doing so. But with that plug out of the way, mate, how was the Christmas and New Year's?
Oh, awesome. Really nice to chill, separate away from everything, close off, and just be super present with my kids, which is amazing. So feeling really aligned, refreshed. I always do a really intensive goal setting every year.
Oh, really?
Which is something that I just did with the team actually before this. And yeah, I find it's really essential to have that clarity of direction, the alignment, and the balance. Instead of focusing, let's say, so much on finance and crypto, it's like, what about health? What about relationship? What about your kids? What about the things that you do for fun? So having real clarity on what do I want to focus on, and then how do I measure and manage this, which is a weekly assessment of each of the areas, scoring myself, and then what do I need to focus on next week? So I don't get to the end of a year and say, okay, my community skills or what I've focused on, friends, that kind of area is a 3 as an example. I catch it every week. So every area by the end of the year should be an 8, 9 or 10, rather than having this massive chunk out of your will and you're really off balance. So just bring it back into that, and whatever gets measured gets managed. And that's true success, not just crypto. You can be incredible at crypto and then have poor health. It just doesn't work. So you need to be successful as firing on all cylinders and knowing what those cylinders are, which I think there's 8 core cylinders for me. And I double down on that. So I'm really excited for the year ahead. There's always tweaks and things that I want to really focus on. So
mate, 8-cylinder Joe.
Yeah, exactly. Firing away. Someone called me a high performance financial athlete or something.
All right.
Where it's all about the performance that you have and then bringing that into finance and really accelerating that area.
No, I really agree. I think as the years have come along in crypto, I've definitely realized that's more and more the case, especially now. Again, I think it's more the family, just you have less time available. Time is such a scarce resource.
Yeah.
I was sort of front running the New Year's resolution. I started back in October last year, just trying to calorie count, things like that. Because it all has a knock-on effect and everything else that you're doing. So
absolutely.
It's great.
I guess the simplicity of understanding that if you feel good, you make better quality crypto investment decisions. It's that simple.
Yeah, it's true.
So we need to build all the things that make us feel good, and then it filters through.
And that's a nice segue to, I guess, your latest annual report, why everyone got 2025 wrong and how to win in 2026. It's really good to have you on in a very timely moment right now. You've just released this report, or you're releasing the report?
Just released.
Just released?
Yeah.
So will we be able to give everyone a link to that after the show? So we'll have that included as well. But I wanted to spend some time today just going over a lot of the key points from this, because I know we had a retrospective episode Christmas Day last year as well. But this kind of really, I think, is a nice continuation on a few points that we raised, but you could really double click and sort of go into depth on some of these points that I think a lot of people sort of questioning themselves on anyway right now. So, if you have been sort of thinking about the year that was, this is the episode to really catch the meat of. So I first want to start with why 2025 confused so many people. Now, I think at a high level, that's a very throwaway comment. There's lots of reasons why people are confused at any given point. But I mean, we're talking like key misunderstandings. I mean, I think the last year was a great example of even when the experts don't get it right. I mean, where do you want to start with this one? What do you think was like probably the biggest misleading event for last year?
So as an overall, the expectation of performance.
Yeah.
So I saw so many analysts or experts coming out saying 150, 180,
Yep.
here's my strategy, here's what I'm going to do. And my thought was the complete opposite. Rather than having a projection of pricing, and
Yep.
sure, you can use your Fibonacci extensions. We hit 1.618 on the nose at around 120.
We did. Yeah.
So that was clear, and that was an opportunity to take some profit and risk off the table. But with these higher projections, it was very misleading for people. They buy into the YouTube videos and all this. Okay, that's my target.
It's even
that's
worse now. They're buying into what banks are saying. Like Standard Chartered was still saying 220 or something.
Yeah, absolutely. So I think separating away from that and just looking at the data to help you form those decisions, where you look at the on-chain, where you look at the psychology, where you look at what's happening in the technical analysis side of things, the macro environment. That's how you base or should base your decisions, rather than saying, okay, I think we might go to these levels because of maybe some fib extensions at 2.618. I think it's up at 180 or maybe around.
It was,
So I think separating away from that and looking at the reality of, okay, now the strength of the market's downtrending. Now the long-term holders are selling. Now the ETF outflows are coming on a much greater proportion than the inflows are happening. Therefore, the price has to go down. So I can forget about my targets of 150, 180, and I can trade what's the market telling me? What's the proof? What's the data? I trust data. I don't trust analysts and experts and influencers, right? So it's the separation, and I think that's the thing that most people got wrong. They're too busy listening to the Pied Piper instead of creating their own music based on data and information. So that's probably the number one thing that people got wrong, and will probably continue to get wrong into the future.
I think that's a big evolution point for anyone that's been in the space for a while. Like, you have your plan, but then sticking to your plan, you never really know how hard that actually is until you have to live through it.
Yeah, absolutely.
I mean, another key point I think you raised in this particular vein was the 4-year cycle's over. Really keen to get like your take on that one, and how yourself and your team are thinking about why that might be the case. Yeah,
absolutely. So the institutional movement has really changed this cycle, if you want to call it a cycle still from the last. In the last cycle, there was some institutional adoption, but it was very minimal. And then obviously the ETF flows as of, 14th of January, 2024, bang, turned on, and the flows were astronomical. It's the Bitcoin ETF, BlackRock was the highest performing ETF in history by like 1,000 days to 70 billion. And I was actually looking at the report again before, just to pull out some more specific statistics. In 2025, the IBIT performance of the Bitcoin ETF was minus 9.56% for the year. So it was down 10%, yet it outperformed based on inflow volume of even gold, which was 64% up over the year. So it just shows the demand and the reprogrammer we need to have. Instead of this retail mania blow off top, it's institutional long-term adoption. They have a 5 to 10 year horizon, not 5 to 10 day horizon like most retail investors still have. So shifting the paradigm of that and seeing that inflows and that commitment, we saw at one point 2,000% of the daily issuance of Bitcoin was being purchased by ETFs and treasuries, 2,000%. And the worst that we saw was 360% negative outflows. And that happened to obviously coincide with the long-term holders offloading 1 million Bitcoin from June 20 to November, and then another 1 million in November. And that's why we saw this huge cascade down in price. So whilst I think the 4-year cycle is broken from the institutional perspective, but also from that 80% drawdown narrative. The drawdown's 36%. Is this the bottom? Potentially not. But we've seen a huge dynamic shift in tops and bottoms. And it's that law of diminishing returns.
That's right.
We're starting to see, maybe we shouldn't be looking at the 3.618 Fibonacci extensions anymore. Maybe it is the 1.618.
Maybe that's it.
And maybe it's a fallacy of the past. And these blow off top huge outcomes are just not reality anymore.
Okay. And I guess another big stumbling block out of 2025, I think sort of links back to what you said first about performance being a key driver, altcoins. So let's talk about that.
Why do people buy altcoins that are not outperforming the lowest risk asset, Bitcoin? It is that simple. What wrecked people is they trade Solana, SUI, XRP, whatever it is against USDT.
Yep.
They don't have that 3-dimension of how is it performing against Bitcoin.
Yep.
So whenever I trade any crypto, let's say SUI, I look at USDT and I look at Bitcoin. And USDT, it could be performing incredibly well, but you check it against Bitcoin, it's still in a downtrend. So why, like some of them, just picking off SUI as an example, was like 65% down against Bitcoin.
Yeah, it's been hammered.
Wild.
Yeah.
But people still buy it. People still hold it in the hope.
Yep.
And it's nothing more than hope. It's not data-driven analysis. I hope this is the bottom. How many times do people say that about Ethereum?
Yep.
I hope this is the bottom against Bitcoin. It kept going down and down and down. And that was another 60-something% down against Bitcoin. So if you just sat in the lowest risk asset and you waited patiently until we see a confirmation of trend directional change and consistent outperformance. I'm not talking about a daily green candle.
Yep.
I'm not talking about 1 week of green candles. I'm talking about a consistent uptrend.
High highs, high lows.
Exactly. And a clear market momentum change. Bitcoin needs to be performing above really that 100K. The short-term holder cost basis is 98. Huge stumbling block. Psychological level 100K, huge stumbling block. The 21 and the 50 moving average on the weekly, not daily, weekly, huge stumbling block around 102K.
Yep.
115K is a massive area that we must reclaim. And then obviously the prior all-time high. So there's all these levels that we need to reclaim before we see any kind of real altcoin performance. Where people got it wrong is investing in alts when they should have been in Bitcoin. Where people got it wrong is they were trading daily charts in altcoins. If you go and look at the recent performance of XRP against Bitcoin, 2 massive daily charts, huge outperformance. People buy that performance. 100% retracement, all within a week. So if you look at the weekly candle, you zoom out to a week, you wouldn't have traded that because the wick goes up and the hammer comes straight back down, and it's still below the 10 EMA, still below the overhead resistance level. So what my advice to anyone would be watching this, if you do venture out into altcoins, which most people do because they're gamblers, they don't have the strategy, they want to get out performance, like not even against Bitcoin, they just want to perform. They think by buying something that has a lower market cap, it's going to perform better than Bitcoin. That's a false premise that people keep following and buying into because the reality, the data doesn't show us that, apart from privacy coins, which obviously we can touch on, and centralized cryptos as well. But shifting that mentality away from daily candles to weekly candles, I need sustained performance above resistance level, a close on a weekly, which is Monday morning here for us, 10 a.m. in Brizzy. When it closes that weekly above resistance, when Bitcoin closes 95K above the weekly, then, okay, cool, we've got clear directional change. And now I can start to layer in. I don't go, okay, 50% of my portfolio into SUI. I say, right, 2.5% here, above this level, 5%, above this level, 10%. Strategically building, turning the dial rather than being 30% of my portfolio bang straight in. I think this is the bottom. Like, don't think, trade on data, trade on outperformance against Bitcoin, and then only trade into Bitcoin when it's outperforming gold. And that's what I love about the multi-dimensions that you can have now in your portfolio because of Pax Gold.
Yes. Yep.
Why buy Bitcoin when gold is destroying it?
Yeah.
And then when you look at gold against Bitcoin here, if we close above the 200-week moving average against gold, then you like 50+% of your portfolio should be in gold, not Bitcoin. If we close below the 10 EMA on the weekly chart, then there's clear, it does look overheated to me. 3 momentum indicators, RSI, MACD, stochastic are all pointing down. Then sure, reduce your gold stack right down back into Bitcoin. Like, have a multi-dimensional portfolio. It should be stacked around 3 things: gold, BTC, USDT. If gold isn't beating USDT, don't be in the trade. If gold isn't beating Bitcoin, then be in USDT.
It's easy when you say it like that.
It honestly, why people love working with me, because the
Yeah.
strategies are simple. It is simple. It's simple to be successful in crypto. It's simple to be successful in life. It's your daily practices. But people get up in the morning, they look straight at their prices. Oh, XRP is up 10%. I'm going to buy some today.
Yeah, the FOMO is a very powerful feeling. It takes a lot to overcome it, I feel. And, you know, talk about 2025. I think we sort of touched on it a few times, but, you know, your emotions definitely get reflected in your actions in the market, right? And when you have access to things like Hyperliquid, even like some of these other products like Rollbit, where you can go 1000x, even on something like Bitcoin, it becomes more and more compelling to the average person of, oh yeah, I'm going to make it on one trade, as opposed to I'm going to do the right thing over a long period of time to see results. Like it's just that instant gratification that everyone's expecting.
Yeah, absolutely.
And especially when you see big green candles, unfortunately, like everyone's instant reaction of, oh, now it's time to buy. Like now it's comfortable, as opposed to wanting to buy when it's really sweaty and things have been going down for a little while. And, you know, there's enough reasons to potentially buy on the way up now. I'm not too sure if you did or didn't touch on it in your report, but to sort of look forward a little bit, is there any key signs that, you know, you and your team are looking for in 2026? It's a pretty pointless game trying to pick bottoms here. But, you know, is there any way that you guys are approaching what a bottom might look like for the markets right now, or like, you know, what a recovery starts to look and smell and feel like? I think that's where, you know, experience and time in the market really helps us.
For sure.
I just recently reread another one of those famous trading maxims, which I think now is pretty relevant. It's, you know, price doesn't necessarily capitulate people. It's going to be time. And I do wonder if, you know, this is going to take a lot longer to recover than what people are expecting. What's your thoughts and your team's thoughts around?
Yeah, really good question. Going back, before I answer this, going back to the statement that you mentioned about people's emotions grabbing hold of them, what do you do to pull the circuit of that? You strategize ahead of time. You automate your strategy and you say, at these levels, I'm going to sell.
There's no guessing.
And it's done.
Yeah.
And then you don't even have to watch it trigger. It's already done. It's automated for you.
Yep.
So you can automate part of your strategy through exchanges, have your, like I love OCO orders, one cancels the other.
Yep.
So if I enter in, let's say at 95K on Bitcoin, I've got my stop loss just below the resistance, or now support at 94.5. And I've got my target level, let's just say short-term trade at 98K. Short-term holder cost basis, 3-to-1 ratio. That's a great trade. Short-term, it's automated, it's done. I don't even have to look at it. And then one day I go into my exchange account and I'm like, oh, wow, I've done so well here. My trade's filled. And even if you hit your stop loss and you lose money, you've still done the right thing.
Exactly. That's where I think a lot of people get caught up. Oh, I've failed. It's not really. You just followed your plan.
If you do the right thing consistently over a decade, you make serious money. If you make money doing the wrong thing, it reinforces poor behavior.
That's right.
And over time, you lose a ton of money. It's like you go into the casino, you seem to win first time. They've got the cameras. It's like, let this guy win. And then all of a sudden, he thinks he's a master. I won once on roulette. I know exactly what I'm doing. Come back in, double my money, bang, gone. It's like, who's the Muppet? It's really simpling it down to what's the strategy? How do I build this out before the emotion arises? So coming back to your question, what does it take to be successful and identify market tops and bottoms? There's a number of key things. Number one is your own psychology, but number two is certainly the market psychology. So fear and greed is real. If you look at when people are in max fear, that's picks market bottoms. If you pull up the fear and greed chart, don't look at the price, circle the dates, go to the chart, you're like, oh, bottom, oh, bottom, oh, bottom, oh, top, almost identical every single time. Key thing, psychology drives everything. Buying and selling in property, businesses, whatever it is, drives everything. Number two, what does crypto have that no other market in the world has? On-chain data. Mastering on-chain data, simple things. I spoke about long-term holder outflows. Identifying, okay, now long-term holders are selling, sustained selling, extreme selling, continuation of selling, long period of time. What's going to happen? Well, markets are driven by two things, supply and demand.
That's right. Yeah.
So if the demand for it is staying constant or dropping, and the supply is, as we know, 450 Bitcoin a day right now, if that starts turning over, and then on top of that, we've got ETF and treasury demand dropping, what has to happen? The price has to come down. So why am I watching this really closely? Right now, long-term holders are baseline. They're flatlining. They've done their selling. They've sold to a point where it doesn't make sense to sell right now. And they might wait for price to go back up before they start selling again, but they're done selling.
Yep.
As far as we can see for a sustained period of time now.
Yep.
ETF and treasury flows have had that 360 outflow percentage wise. And now we're seeing 75, 140% inflow days in comparison to what's being issued on a daily basis. Two simple charts. If I know the market's driven by supply and demand, and I can check in on-chain data and get instant data on that, I don't need some expert on YouTube to tell me what's happening.
Yep.
I go to the charts, they tell me the truth.
Yep.
This is where you can waste time watching YouTube videos for hours and be more confused when you started.
Yeah, it's the have to complicate it to solve it sort of situation.
Man. Just bring it right back. So
Yeah.
other things like I look at, if a long-term holder is someone that's held Bitcoin for 155 days or more, a short-term holder is someone that's held it for 155 days or less. So I also want to see what those guys are doing. When they're in extreme losses, they often capitulate. When they're in extreme profit, they often sell at a profit. When they are coming to their cost bases, when they've been negative 20% and they've been absolutely themselves,
Destroyed.
what do?
Sell.
I need to get out of the market.
Yeah. Kill the pain.
So that's why 98K right now is the short-term holder cost basis.
Yeah.
And that is why it's so critical that
Yeah.
we break through that.
Yeah.
If we don't break through that, we're coming back down,
Yeah.
and we might come down to the 81. We might come down to the true cost basis, which is 81K.
Yeah.
Or we might even capitulate further down to the 200 week, which I think is 56K off the top of my head. So we're not out of the woods yet. People see a couple of green candles, bottoms in. ETF flows are going, long-term holders have stopped selling. Short-term holder cost basis is about even now. Just let's be patient and not get so driven by a couple of green candles. And this must be the bottom. Look at the RSI, look at this. Okay. Let's get clear confirmation and build the position. So there are definitely things that you can look at. Peak fear, now we're up at 56% into greed territory. Peak outflows has stopped. Long-term holder capitulation has stopped and now is flatlining. Inflows have started to build again. So there's a lot of positive momentum showing me that we may be nearing a bottom. Maybe. I need clear confirmation, and 102K is really the level that we need to take out on a weekly close for me to say, yeah, I'm feeling really positive. Otherwise, if you're jumping in and trying to buy bottoms, you don't make money buying the bottoms. You don't make money selling the tops, because that's never a reality. Like Ethereum, everyone thought it was a bottom, and then they thought it was a bottom, then they thought it was a bottom, and it continued to bottom. You make money in the middle ground. Crypto is the highest risk asset that we invest in. So why would you take on exacerbated risk in a high risk market? You shouldn't. You play the middle ground. You can still outperform every other asset class 10 times over. So that's really the messaging. Like, you can identify it through some of those key metrics. TAs obviously being one of them as well. Look at the weekly time frame. Are we bottoming in the RSI? Are we bottoming in the momentum, heading north in all of them, which we are right now? But there's still those key levels to take out. So yeah, just kind of circling back, what is a real successful crypto investor? They're one that look at psychology of themselves. They look at psychology of fear and greed. They look at on-chain data. They look at macro, what's happening in the bigger picture. And also they look at technical analysis. And when you look at all the pieces of the puzzle, which is really only a couple of metrics that you need to look at within each. And I have my tabs open and I literally go 15 minutes, bang, 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 bang. Okay, I know exactly where we're at. And I'm done. Like, there could be days on end where I don't look at the charts.
Because there's no point.
Days on end.
Yeah.
And I run a multi-million-dollar fund and an incredibly big personal portfolio, and I will not look at the charts for days. I didn't do one trade for a month over Christmas. I didn't trade once. I didn't need to.
Yep. Everything
Everything was already set up. I made the right decisions before, and I've just let things play out, but nothing's really eventuated, so I haven't had to do anything.
Well, that's maybe a nice way to sort of jump into again another point of what you've said in the report actually worked in 2025 as a bit of a review. Dollar cost averaging. I feel like this has been talked to death a little bit, and I still feel like a lot of people out there, especially that I speak to, just in common just chats, it's just can't connect the two in terms of like, yes, I know what it is, but applying it. Is there any sort of key takeaways that you could give to people on what everyone might be doing wrong with DCAing potentially, or just how they're overcomplicating it? Like, what's the simple way to approach it?
Yeah, so right now, the easiest thing to do would be to turn DCA on below 100K,
Yeah, okay.
accumulate. Once we flip over 100K, then you might just turn it off.
Mm.
Real easy to do. One thing that I looked at before, it used to be Monday morning was the best day to buy for DCA. It's now Sunday morning.
Mm-hmm.
Sunday mornings, I don't know why they flipped to the best day to buy. Well, I think I do know why. It's because there's very low liquidity that day, and it's often massive outflows happen for big institutions now to protect themselves on the Friday night. We close out the position over the weekend. Mm-hmm. So that's then our Saturday night, and then bang, the flows come down, enter in Sunday morning. Markets open on Monday. People are a lot more open to now, okay, we've got control. We know what's going to happen for the week. The weeks go like that, Monday to Thursday, and like that to Sunday morning. And then it literally has been that throughout the year. So simple things, knowing when to turn DCA on. But where does that fit in as your overall strategy? Are you accumulating Bitcoin for the long term and you don't care?
That's it. Everyone's going to have a different sort of speed they're running, right?
Yeah, absolutely. Well, I think if you're newer to the market, DCA should only be your strategy. But if you're an advanced investor, you might turn DCA right down as 1 or 2% of your allocation or your strategy to allocate. And then you might have bigger moves into cycles or whatever it is, if there are cycles, and see that as the bigger picture. But I think everyone should have a percentage of Bitcoin that they hold and they never sell. And then they should have maybe a short-term portfolio for more advanced investors, which is 10, 20% maximum, which stays on an exchange, and that's separate. And you keep that away from like maybe your midterm strategy is completely different exchange.
Well, let's jump into that a little bit, because I know one of the items that you said again in 2025, what worked in review, being ruthless, defensive and offensively with your portfolio sort of construction. So I'm guessing we're talking more about maybe these medium term holdings here. What do you like? How do you get people over that line? Because I'd be really interested to hear your thoughts about that holding and hoping mindset. Like, is there a way to get people to finally understand, or is it simply have to touch the flame a few times?
Oh, well, the reason people come and work with us is here's all my lessons, don't do it.
Yeah, okay.
But sometimes people don't listen, they can't listen, they have to go through the experience themselves, which is unfortunate. But it's just showing proof of data on a chart. If this is the performance of this altcoin against Bitcoin, and by holding that you would have lost this, or you have lost this because you've held it, are you ready to start changing your behavior patterns? Why are you paying me to come and work with me? Do you want to keep doing what you were doing, or do you want a new way of operating and thinking?
Yes. Okay.
So it all comes down to when someone sees, okay, I had 10 grand in this, it's now worth 4 grand. But if I had 10 grand in that, it would be now worth 12 grand in Bitcoin as an example. The difference of that, okay, now is net what, 8 grand. So you've effectively cost yourself 8 grand by one decision. Does that make sense? Yeah, it does make sense. So it's just showing people the data and the evidence to back the belief. And it comes down to programming. I went through this with the team. I find this absolutely fascinating. I love this. Our programming then shifts into our beliefs. Our beliefs then shift into our attitude. Our attitude is our feelings. Our feelings leads to our action. Our action leads to our result. Programming. I have to invest in high spec altcoins to make money, like extreme returns in crypto. I have to go and take on an unnecessary risk. I have to hold this for the long term in order for it to perform, because I've seen Shiba and Popcat and some of these cryptos do it.
Such and such on Twitter made $16 million.
Exactly.
From $1,000.
Yeah, it reinforces this poor behavior. This is 1 in a dozen that made poor decisions and invested too much in a shitcoin that shouldn't have performed, but did, and they got lucky, and now everyone thinks that's the right way to do it. So they create this programming that then reinforces the belief. And that belief is that I need to find all these high spec cryptos. I need to go and follow these influencers that keep pumping out these research reports that lead to doom and gloom and zero. And therefore my attitude is that I feel really enthusiastic about going to find these high spec cryptos. Therefore I feel really positive and uplifted. And therefore my action goes and is aligned to this. And therefore my result continues to suck. Programming, reprogramming. I invest in crypto to make money. I invest in the best performing cryptos to make money. I want to take on less risk and outperform. then if I have that as my programming, my belief is, okay, I need to have a real clear strategy of what's actually making money. Therefore, my attitude, I feel really excited about doing the right thing in crypto and following the money, not beliefs that didn't serve me or any of these suckers on YouTube well. Then my feeling, I feel really in control all of a sudden. I'm approaching the market completely different. My actions are aligned to my programming, which are my affirmations really and my self-talk. And now all of a sudden I'm doing the right thing. I'm not overtrading. I'm trading weekly candles instead of 4-hour candles. I'm trading into Bitcoin instead of shitcoin. And then what happens to your result? If you keep getting the same result and your result sucks, then you need to change your programming. It starts with your program. You can't change your action. You need to change your programming. Well, it's real simple, right?
Let's go back to what you just said there. You know, you start with the beliefs, and I agree, beliefs aren't static. Like, I'm sure you guys go back and revisit this time to time, but starting the year fresh, team's all back on deck right now. You know, yourself are in the mindset of the markets. What's some of the key beliefs that you have right now for approaching 2026 from a portfolio perspective?
Yeah, so the belief is that there's an evolution in the acceptance and adoption of crypto. So Morgan Stanley coming in,
yeah, that was recent.
Charles Schwab coming in.
Yeah.
So the belief is built on data. Just to be very clear on that, it's not like, oh, I believe crypto is going to perform an all-time high.
No.
It's reinforced by things that change my belief, which I'm very open-minded. I can sway based on evolution of data. Clarity Act. 26th of January. It's a real big thing, right?
It is. People don't realize it, but it's a big one. And especially now that I think Brian Armstrong came out swinging, he doesn't support it because it's more preference of what the big banks will get out of it as opposed to the average everyday person. So again, like, I think that hopefully gets through in a way that makes sense for everyone. Yeah. And it's not just the top 0.1% that benefit.
Yeah, absolutely.
Yeah.
But that's the first massive regulatory framework for the US in crypto's history.
Probably will set the tone for the rest of the world too.
Of course. Yeah. What US does, everyone does.
Exactly.
It's a game of catch up.
Yeah.
Hopefully they don't start taking countries, but they're clearly moving in a direction of acceptance.
Exactly.
So that to me, from really 14th of January 2024, that rubber stamp of approval with BlackRock and Fidelity and all the other guys, that set a tone of the future for crypto. Regulatory framework sets a tone for the future of crypto. So I am very positive on the foundations. And what has served me well in the past, in 2018, instead of being like the price has come down and this is happening, to me, I was looking at what's going on with the base foundation of Bitcoin. Has it changed? Is it improving? Are people developing on it? Yes, they were. Yeah. So I know the price has to come back. And that's what I see. I don't care if we go down to 70K. I don't care if we go down to 56K.
Yep.
The evolution of the foundations of crypto is shifting to the positive. And that to me is like the biggest thing that's happening in crypto right now. The stamp of approval keeps coming from the biggest superpower in the world, which is the US.
Well, me and Ted always joke about it, but I think we said on this week's podcast, the day where you can say Bitcoin and not have to like brace yourself, like that's when you know we're there, right?
Yeah, absolutely. Yeah. And the day that people are able to use Bitcoin and not really have to think about using it, it's just part of, I tap my wallet, which they obviously can do now, but most people don't know that.
Everyone does PayWave now or pay with their phone. No one knows how that works. But they all just accept it because it is what it is, right?
And you can do that with crypto, right? Yeah. You can have your crypto wallet, bang, spend your crypto anywhere in the world. Yeah. So it's breaking down the barriers, which is all education. That's why I'm so passionate about what I do. Yeah. So that's a big thing that's coming. I think that the shift in the acceptance of liquidity flow into the market. We know that things are based on business cycles. The ISM is getting to a point where it's starting to improve. It's just
flatlining.
The S&P 500 now shifts down into the Russell 2000, which is also expanding. Yeah. And that's the altcoin flow, right? You got your Bitcoin, which is your S&P 500, your Russell 2000, your altcoins. Yeah. And if we see that start to pick up, that's people taking on more risk. And that's a great identifier that you can use then, okay, people are taking on more risk, that will flow into crypto as well. Interest rate cuts certainly help that ease the tightness. So we've gone from quantitative tightening to now some form of quantitative easing, which is so creative, comes in so many different ways. Yeah. 1.45 war veterans getting a stimulus check of $1,700 in the US.
Right.
It's printing.
Yep.
It's expansion. We're giving this to you. That money, where does the money come from? It doesn't come out of thin air, right?
Don't worry about it.
Yeah. Don't worry about it. So, what is this monopoly money that we have? We just print more. What is printing? No one even knows. Who owns the printers? It's wild.
It is.
Oh, the more that you know, the more that you're like, wow, I need to buy more Bitcoin and more gold and more hard assets and real assets, and really step away. So I think there's the shift of this ease coming, the buying of like building the balance sheet again, which starts slow, and then the tap turns on and the printers go brr, and then everything starts to expand again and people take on more risks. So I do see that the back end was very in tune with what's going on in the global situation. Bitcoin suffered more than any other market, really. And now I think that ease might start coming, but I do not think we're fully out the woods yet. It's not, oh, Joe said that this is going to happen and bang. I think as soon as we get above here, we're good to go. There still is a real threat right now of a downside to lower levels. So whilst I'm still bullish in the bigger picture, in the grand scheme, decade vision, I'm still cautious in the short term. And that's why I'm still straddling into a gold portfolio. And that's why I still stack silver. And I think anyone that gets into crypto often can only be a crypto investor.
I think that's going to change in the coming years.
Of course.
Because even like myself, like I've only in the last, I'd say, year and a half, really started to take small but now larger steps to sort of broaden my knowledge base of the markets, like outside of crypto. Like, I mean, even you just start to realize FX flows, that impacts Bitcoin's price. It's going to become just interlaced with the rest of the market, and that's just how it is.
Of course. Well, look at silver.
Yeah.
Look at silver against gold. Look at silver against Bitcoin. And then you're scratching your head like, well, I only own Bitcoin and USDT. And gold's outperformed Bitcoin, but silver's absolutely crushed gold. So I should probably have some exposure to that as well and be a bit more multi-diversional. And also when we look at stocks, like some of the stocks out there, your AI stocks, your quantum, like I would just go into ETFs. The US ETFs out there are phenomenal across those areas, data centers, etc., and be a bit broader in your spectrum and stop being this, oh, I think crypto is going to outperform everything, so I'll just double down on that. And oh, actually stocks have far outperformed crypto, so why shouldn't I have some exposure there? Why don't I take my 100 grand in Bitcoin and say, well, maybe 20% should be in stocks and here's where I allocate. Maybe I should actually have some precious metals and that should be 20% of my portfolio and here's where I allocate.
Yep. No, food for thought.
Yeah, absolutely. Like, let's get a bit more mature.
What would you say, just again off the report that you guys have put together, what's one thing that you hope someone takes away from it and remembers heading into 2026? If there was one thing.
I think it would have to come back to, if it's not beating Bitcoin, don't trade it.
Beating Bitcoin, don't trade it.
If it's not beating Bitcoin.
If it's not beating Bitcoin, sorry.
Don't trade it. I just think the level of maybe people watching, if they take that one thing away and trade weekly candles, not daily, I think if you implement those two things, your performance in 2026 will change drastically. And then obviously diversifying, having your gold BTC pair as an example. Just a couple of simple 1% tweaks. And obviously, I know you said one takeaway. I don't think there's one. I can't help myself. But
that's all right.
Just reflecting on it, even on the session. Automating your strategy when you're not emotional. If you do that, then you'll save yourself a fortune. It doesn't matter if you approach it and you change your opinion. Just release some profit. Take some profit out of the market and be okay and celebrate that as a win. And you still can have allocation to the market. It's not if this, then that. Don't sell it all, but reduce your exposure, your risk.
It is a weird thing in crypto. It's almost like I always either have to be in something. Like there's just this weird mentality, and it is just the fringe, like highest form of risk you can take in markets almost. Just you can swing 40% up and 60% down or whatever, but you're still like, oh no, I have to be in it. I don't know why. It's got that sort of stigma to it, but mate, that was insightful. So again, we'll have a copy of the CCI report in the description for everyone to check out, as well as links and where you can find out more about CCI, the Crypto Consulting Institute. But Joe, thank you so much for coming on again for another year. I dare say we're doing this again, 12 months time.
Thanks for having me, and thanks everyone for watching, and hopefully you got something that you can implement and action instantly out of this to change your performance in 26.
There you go. Game on. Thanks guys.